Alright, this is the project for the company financial slash investment slash employment analysis over the Kellogg company. We were assigned a publicly held company. We were also assigned to review the company's stock performance during the course of the past 36 months. We were also tasked to report on the performance that we observed. We discussed the company's financial position and we made recommendations regarding investment and employment within this company. Um, my name is Luke Nguyen. I'm with Oscar Diaz and Elias Ramos. We were given the company Kellogg, and here's the introduction.
My name is Oscar Diaz, and I'm going to be giving a brief introduction of the Kellogg Company. The Kellogg Company's main headquarters is located in Battle Creek, Michigan. Uh, the company has an international outreach that has allowed it to employ over 32,000 people worldwide. Its products have reached over 180 countries, and its manufacturing facilities are operated in 18 countries across multiple continents, the biggest one being in England. In 2017, the Kellogg Company reported a net income of $127 billion, which has been a major increase over the last couple of years. The Kellogg Company was founded in February 1906 by Will Keith Kellogg. However, the original Kellogg Company was a partnership between two brothers who later had a falling out and ended up creating two companies. In 1929, the stock market suffered a crash which brought the economy down to almost nothing. Kellogg's was able to persevere through this event by being able to employ more people by creating more shifts and decreasing work week hours. In 2001, Kellogg's bought the Keebler Company, a food manufacturing company that has been around in the United States for a while. And in 2012, the Kellogg's Company acquired Pringles, which gave it a big financial boost that was very profitable for investors.
My name is Luke Nguyen, and I am in charge of analyzing the industry in which that Kellogg's is a part of and the position within the industry that Kellogg is in. Currently Kellogg is one of the top companies within the major diversified food industry. This is speaking a lot since there are so many different companies in the global market within the food industry. It has been successful since entering the global market in 1914. Um, its success comes from whenever it sees that something needs to be improved within the company and it instantly improves. For instance, it made it very easy for the company to expand whenever the times were changing and people needed food on the go. And for example, they made easy to go cereal. That way they didn't have to cook it. They can just pour it in a bowl with milk and then eat it in less than 10 minutes. This is one of the examples on how Kellogg has been able to tailor to the customers and has been very popular ever since. Currently, it sits 13th on the list of companies that Forbes has created called the Top Regarded Companies list. And Kellogg's Pop Tart line alone has raised over $331 million in sales, which is 5 times as much as the any other company within the list. Here's a chart of the stock prices over the past 2 months for Kellogg. I felt as though the past 2 months are a pretty clear example of how it's been going. Um, and so it has been declining, as you can see. That the peak was at $71 and it's now currently sitting around 60. The decline may be due to the fact that the CEO position was transferred over but that happened in 2017, and the effects are probably not still lingering. Currently, we think that the reason that the stocks have dropped around $11, $10 is due to the stock market in general decreasing overall because the United States is very in debt due to China, and the investors are currently scared to invest in all these companies that could be failing. So that might explain why the stock market in general, including Kellogg, um, has been decreasing over the past couple months in 2018. Although we would advise investing in Kellogg because at the moment, it seems that the worst has already come for Kellogg. It's currently at a very low price for the stock. But the change in CEO and the recent implementations of new ideas and projects are supporting the progress that Kellogg's once was at. Um, the stock market is it's also expected to rise again since the political influence of the Democratic and Republican parties have started to diminish, and 2019 is looking promising for this next serial powerhouse of a company. Even though there's always risk when investing in a company, um, we do believe that Kellogg is a very good company to invest in. It is on the rise again, as well as the other companies in the stock market. Um, but as a consensus, after analyzing the stock prices and the trends, we believe that investing in Kellogg is a good idea.
My name's Elias Ramos, and I was in charge of going over the company's financial analysis. The following chart shows the balance sheet for Kellogg over for 2018 as of September 29th. The following chart shows the financial ratios between Kellogg Company and its industry. The Kellogg Company's quick ratio for the quarter that ended in September 2018 was 0.52%. Although Kellogg's may not have such a strong quick ratio, it does meet the minimal requirement. The current ratio can give a sense of the efficiency of a company's operating cycle. Kellogg Company has a current ratio of 0.84. It indicates that the company may have difficulty meeting its current obligations. Low values, however, do not indicate a critical problem. If Kellogg Company has a good long-term prospects, it may be able to borrow against those prospects to meet current obligations. Kellogg's current inventory turnover ratio is 6.73, which means that the average value of the inventory has been sold 6.73 times during the year. Kellogg Company debt to equity for the quarter that ended in September 8, 2018 was 2.93. A high debt to equity ratio generally means that a company has been aggressive in financing its growth with debt. This can result in violate earnings as a result of the additional interest expense. However, overall, it is fair to say that Kellogg has tons of room for improvement, but its standing in the market for the third quarter is not bad. With the fourth quarter underway, Kellogg's has much time and is aiming towards ending the year strong and with a good standing. Although Kellogg's financial ratio and balance sheet numbers may seem low, it's making many changes for the following year and will regain its ranking and be on top in the food industry. Thank you, and I hope you enjoyed.